Imagine turning $500 into $10,000 without day trading, without risky bets, and without even picking individual stocks. Sounds wild? It's the same move hedge funds quietly use, while most investors miss out. Stick with me for just 4 minutes and you'll discover exactly how this strategy works, why almost everyone ignores it, and how you can start using it before this week is over. Here's what they don't want you to know. 97% of investors blindly follow the news, but the winners, they follow the money long before it ever hits the headlines. And today I'm giving you the blueprint, backed by data from BlackRock, IMF, and Bloomberg. This is not just theory, these are the same sources tracked by billion-dollar funds. Let's get specific. Take Maya, a Wealth Atlas official subscriber just like you. Maya spent months trying to pick the perfect stock. She read Bloomberg, she watched the headlines, she waited for the next big tip. And guess what? Her portfolio barely moved. But last year, Maya changed her approach. She started tracking global capital flows, real money moving into new sectors and countries, using a free IMF dashboard. She spotted billions moving into Southeast Asian infrastructure, months before it was everywhere in the news. She invested early, and in just 6 months, her returns tripled the S&P 500. While most people were still catching up, Maya was already locking in her gains. And you might be thinking that's great for Maya, but can I really do the same? Here's the secret. Follow the flow. Big money always moves first. Retail investors, the public, they follow later. If you track where the billions are going, by country, by sector, by asset, you can ride the wave early, not get crushed by the crowd.
Here's your step-by-step playbook. Number 1. Every month, check the IMF Capital Flow Tracker or BlackRock's Global Flows Dashboard. You can set up a Google alert for ETF inflows region or capital surge sector. This takes less than 10 minutes a month. Number 2. Cross-check for the biggest jumps in ETF volume using Yahoo Finance. It's free, it's quick, and it tells you when the pros are moving in. You're looking for big sudden spikes in volume that aren't explained by media hype yet. Number 3. Sell when everyone is talking about it. When the story is everywhere. When your friends, social media, even your Uber driver are buzzing about it. That's your exit signal. You want to be in before the crowd and out before the party's over. Let me give you a real-world example. Early 2023, billions flowed into Dubai property, months before global headlines picked up the story. Result? Over 40% growth while everyone else played catch-up. And it's not just Dubai. The same thing happened in India with infrastructure and in Japanese equities in 2023 as massive institutional money poured in and everyday investors only found out months later. According to Vanguard, investors who followed these capital flows beat standard index investing by up to 24% over 5 years. Now here's the biggest mistake to avoid. Don't wait for mainstream news to tell you where to go. By then, the big money has already made their move and most of the easy gains are gone. Miss the flow, miss the gains. If you wait for the news, you're already late. But if you spot the money moving early, you set yourself apart from 97% of investors. You don't need insider information. Just discipline and a simple monthly routine to check the right data. Today, I want you to pick just one trend or region, follow the capital flows for a month, and see what you discover. Drop your results in the comments. I want to see who actually takes action. And remember, this is how you navigate global wealth trends to grow your future. And this is just the beginning. If you want more actionable, research-driven strategies, subscribe to Wealth Atlas Official. Be the first to act, not the last to know. See you in the next video.